All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. So markets finishing slightly negative on the week here on the S&P 500. Notice the vertical lines here on my chart represent the options X, and really March, with the exception of April, but March, May, June, July, August, we dipped into it every time, and it's becoming a noticeable trend. The concern is, at what point does the rug get pulled and it doesn't dip into OPEX, or it dips into OPEX and the dip isn't bought? So that's something to be careful of here. As we notice this channel that we've been in since late October, market's just kind of hanging in here, and lately it hasn't been able to hit the upper range of this trend line. So it has been in the lower half, which tells you that even as price is increasing, we're seeing a little bit of a momentum decrease. If you pull up the RSI or the MACD, you can kind of see the same thing there as well. But the problem in this market right now is that I've talked earlier about there being a possible bear market this year, and the indices have held up reasonably well, but there are bear markets pretty much everywhere, and the breadth is terrible. And you can see that in the market as evidenced by the declining momentum. But how is the market staying up? Well, look at Microsoft, all-time high here. Apple at all-time highs. Facebook just off of all-time highs. Google just off of all-time highs. J&J at all-time highs. So the big cap tech and the large cap mega companies are the ones leading this market. Now Thursday on the S&P, which is our hardest day down that we had, market breadth, 80% of stocks in the S&P 500 were negative, and the market was still positive on Thursday. We touched this lower range of the channel, market finished positive, but with 80% of stocks negative. That is awful breadth, and it's questionably, kind of shady, the fact that they can push the market up by just bidding a few stocks, but that's what it is, and that's just the nature of the beast. The problem is, what this sort of suggests to me is, for instance, Stanley Druckenmiller earlier this year, I believe I pointed this out, he said that he may even be out of stocks by the end of the year. Now, maybe he's using a little bit of hyperbole, but there are all sorts of stocks and sectors that are well off the highs or already in bear markets. For instance, materials off the highs, transports, regional banks, home builders. Look at Tesla. Tesla's been in a bear essentially all year. You've got, airliners, small caps. Small caps have gone sideways for basically 6 months. ARK. So there's bears really all over. I mean, look at what copper's been doing. We talked about copper going parabolic, and by the way, Jason and I pointed this out, that China has wanted lower base metal prices, and it looks like they're going to get that. This is a head and shoulders pattern that triggered. It triggered on the daily and the weekly time frame. So I believe copper is going a lot lower here. But there's been bears really all over this market, and this market's held up by a few companies right now. And what that suggests to me is that they're essentially using the large cap, the strongest companies, to keep the market higher while they dump everything else. And before a market tops out, this is essentially what happens. The strongest of the strong hold up until the very end, and then once the market loses them, that's when it rolls over. So just some food for thought there as in regards to the equity markets. Let's move on a little bit here, and we'll talk a little bit about oil. So oil, another dip this week. So that's coming off the highs here. I said as soon as it breaks this area, you're going to go down here to this 61.57 area, and it's going to have a little bit of support here. You also have the 200 daily moving average upsloping, so it may get a little bit of a bounce in this area, but ultimately I think crude's going to go down and test this 57 to 57.50 area. And if the markets really start to roll over, you could see some margin selling to where it might go lower. You have some support here at 53. You have this trend line here from the monthly chart that it broke out of, which you could also go back and back test. But again, yeah, crude having a little bit of softness here, and that will, that's not necessarily a terrible thing for the market. Some, transports, mining companies, for instance, are going to benefit a little bit from a lower price of crude, and obviously the consumer as well. But overall, crude seems to be in a little bit of correction mode here moving forward. So let's move on here to gold. So gold just kind of going sideways again. I believe I pointed out last week, we want to see it go sideways. We had this nice little snapback rally, and then we stalled out at the 20 MA, and we're kind of just consolidating. So this could be a pattern we could look to play to the long side if it consolidates a little bit more. But ultimately, the big picture with gold is on the monthly time frame. And I did a video a few months back on this. I think a lot of you watched it, but essentially the gist of the video is that gold is kind of repeating what it did in 2008. So I'll just pull this up here. So if you go back to the 99 low all the way up to the 2008 high, you can see here, we'll just zoom in. We had we had that little back test here. We had a 382 retrace on the fib, and then we had a couple of lower lows here, 1, 2, 3, and then a higher low. And then essentially what happened after that, we all know. And more or less you're seeing the same exact thing here. So we have a low in 2015, nice bullish move up. We made a new all-time high, and now we're pulling back. Where are we going? Oh, right into the 382 retrace. Possibly another lower low. So even if gold pulls back a little bit here, the important thing is you're essentially repeating the same exact pattern as 2008, and I don't think anything's really changed. So gold long term is going to continue to be an inflation hedge, and as I said last week, over the last 50 years, gold has outperformed the S&P 500 by a degree of 500% versus 450%. So long term, gold is fine. Just keep buying the dips, keep buying the pullbacks, and the next bull market is coming very soon. I believe we'll get an epic buying opportunity in the not so distant future, and we'll be ready for it when it comes. So with that said, though, short term, gold's just kind of hanging in there. The problem is the miners have not been performing as well, and as we see GDX here kind of hitting double bottom, this may want to go a little bit lower on the chart here. Actually, if you look over the XAU, there's actually a good level here at 120.84, so that would be the low of this green inside bar. We want to see that hold up on a monthly time frame, but right now gold miner is lagging the price of gold, and that's telling me short term that there is some headwinds coming. But again, long term, bigger picture, everything is fine, and just keep buying those dips because gold's going to have a big year, and we're going to have a really good buying opportunity on gold in the coming months, I believe. So just stay tuned for that, and we'll just kind of let it do its thing. Again, I've been talking about don't chase it, just kind of let it do its thing, and when it's time to get in, it'll be time to get in, and I'll let you know when that is. And then silver, kind of the same thing here again, but silver holding up much better here. I'll just clean up some of these lines. Again, silver holding up much better. As we look at the weekly chart here, did kind of come in and basically kiss that 100 moving average. A little bit of a sloppier pattern here, but again, you're still holding these higher lows. So silver actually has a fighting chance here to make a run higher. But again, short term, obviously under a little bit of pressure, just like gold is. But yeah, with that said, I'm just going to wrap it up here kind of short this week. So I am, by popular demand, working on an alert service. So I'm hoping to have that out by the end of the month, but I'm essentially building the website by myself, so it has taken some time, but that is coming. So if you want to have more information on that, just check me out on Twitter or YouTube. But yeah, just going to wrap it up here. Thank you guys for listening, and thanks to Jason for having me on, and we'll talk to you next week on the chart.